Damn. I don't know if how many of you took a moment here to scroll on over into stock market futures, but things ain't looking too hot right now, man. I mean, the Nasdaq is down currently 3%, and we're not even out of Monday yet. The S&P 500 is now down 2%, and the Dow's down about 1%. It looks like thanks to these geopolitical tensions, we are heading into what's going to be close to bear market territory. And my goodness gracious, we haven't even sat down and really talked about inflation yet or interest rates going up. So the question today is, I want to pass it off to you. What are you guys doing right now? How do you feel about this? Because I mean, our chat groups are lit up like the 4th of July. And I've noticed that a lot of people are kind of going into cash heavy. The idea of cost average investing is shaking the weak hands out of this market for sure. And I want to talk about something that has me tremendously worried about how easy it would be to trigger us into a full on stock market sell-off, because what people have not been paying attention to, and I want to point this out, especially to these index investors, because I proponently have been adding indexes to my stock portfolios within reasonable ranges. But I've come to realize right now that if you go into, and a lot of you love the Vanguard S&P 500 index, but if you go into the S&P right now, guys, and go look at what has happened to the top weighted stocks, I've briefly mentioned this a few times, but it is really worrying me a lot, because the entire stock market is pertainably held up by 3 companies right now, and that is Apple, Microsoft, and Google. What people don't understand, and I've talked about this, is that the Vanguard S&P 500 weights companies by their market caps. So basically, if you have a larger market cap, you are going to get a larger piece of the portion. And right now, we've seen this domino effect of everything from Facebook to Shopify. Any company that has offered any kind of guidance into Q1, Q2, absolutely devastated. But Apple is barely trading off its highs right now. Microsoft, I think, is trading down just slightly more. But what people don't realize right now is that if these massive weighted index investors just slightly get worried about what's going on here and they decide to weight down, you're going to see an insane calamity of a full-on bear market with literally 3 stocks selling off 15 to 20%. And it's a little bit jarring, to say the least. Yeah, oil stocks. I know, guys. Commodities, gold stocks. I've been talking about gold stocks recently, and like I said, I'm not too much a commodity investor, but we'll talk about what I plan on doing here in a sec. But yeah, if you just take a moment, guys, don't go look at like the Yahoo Finance is not updated. Literally go on to Vanguard's website, look up the top weighted holdings. Apple is now over 7% because so many of the lower ended large caps have already sold off. So literally, if these 3 companies drop 15 or 20%, you're going to see the S&P 500, any of these index funds, literally go into a full bear market. It wouldn't take much more than a few percent off each one of these companies out of these indexes. So I am predicting, and this is just pure speculation here, don't get me wrong, I hold Apple, I hold Microsoft. I've been scaling them down. Luckily, I did that after I got slapped upside the head from Facebook, because we know these companies are overvalued. It's like no surprise at this point. And I'm still full bullish on this market in the next 3 to 5 years. Don't get me wrong. But when you look at the macro events going on here, folks, it's a little bit jarring, to say the least, because you're literally betting, or not, I wouldn't say betting if you're macro trading here or trying to do what I'm doing. But if you're paying attention to this macro environment, it is very hard to not be worried about all of your funds relying on a very small handful of companies. Now, a lot of you, and I want to know what you guys are doing, because some of us have been doing fine. Like my portfolio has been graciously doing great because I'm not fully exposed to the US market. Thank God for Canadian stocks, because the Canadian market has been blowing up thanks to real estate, thanks to population. I feel like I have some volatility control. I mean, the REITs here are on fire. The telecoms here have been doing fabulous. And I proponently started shifting more into the dividend side of stocks while I sit here and see how this macro event plays out. Because right now, look, if you're trying to make money in these markets, if you're trying to do what I'm doing and outperform these markets, you need to be a little bit more careful about these macro events, because things are going to get a little bit wild here. Stay bullish, my friend. I'm 100% bullish on the markets long term, but as Ryan knows here, I like playing these markets not as aggressively as Meet Kevin, but I don't see anything good coming out of the next quarter here. Like I said, as soon as inflation bakes into this market and interest rates start rising, you have this like compounding effect of just shit on shit on shit. And I really cannot foresee us avoiding a recession this year. like I said, guys, unfortunately, go back to any historical event that has to do with inflation rising at these rates. One of two things are going to happen: either interest rates are going to get out of control, or we're going to head into a recession followed by a depression. We haven't been in a depression in a very long time. I highly doubt we get to those levels, thanks to some things like real estate. But you just look at the factors compounding here, guys. I'd be I'd be worried depending on what your timeline in this market is. As I mentioned, people like my parents are going into retirement very shortly, and you have to be very careful about offloading huge amounts of capital because it's just not going to end well, I think, with these overvalued large weighted companies. I'm going to be holding them forever. I'm not going to sell all of my Apple, Microsoft. I'm never going to liquidate all of those companies. But as I mentioned, I was really large weighted in them, and I have scaled them down a lot. I've shifted a lot of that capital into things like VYM. I think the dividend stocks is, you want to kind of be in these hedged companies if you plan on outperforming this market in the macro, because unless you are into gold, commodities, and primarily these consumer discretions where money's hiding out right now, like I said, guys, it only takes Apple, Microsoft, Google to sell off by 15 or 20%, and we are officially in a full-on bear market. And I don't see how we avoid that, considering those are the companies that didn't offer guidance. When every large cap company offered lowered guidance this year, and it's not even bad guidance. I wouldn't say Facebook's 8%, or they're looking at an 8% revenue growth or something like that. Like, that's not terrible considering how big they are as a company. But when Amazon's posting 3% guidance, I don't know how Apple gets through this after that insane Christmas quarter with the M1 chip. iPhone sales through the roof. And like I said, guys, there's no way I think they can avoid seeing somewhat of a slower growth. And it doesn't even matter if they have good growth. If they just have slowed growth and anything happens like it has with Facebook and any of these other companies, it doesn't take a lot for Apple to sell off 5 or 10%, guys. And if 5 or 10% in a company that makes up over 7% of the Vanguard S&P 500 weighting, it's like I said, it's worrying. It's definitely worrying. And like Meet Kevin, like many people in our chat group, I have been doing two things fairly aggressively here. One is stacking cash and one is mass reweighting. I've really shifted capital over into the Canadian economy. I've really focused on consumer staples, things where I think money's going to hide out, because people just are going to get shaken here. And these geopolitical tensions are what's going to really start triggering this heading into these inflation rate and interest rate hikes, right? So like I said, guys, I don't think I've ever been more bearish on the market in the macro and more kind of concerned, because it's just hard not to be, man. Anytime oil historically has gone on a run like this, we've always had a recession after. Every single time oil has shot up massively. And it's just terrifying when food index prices are going up 1% literally month over month. If everything continues the way it's continuing now with no intervention, we are going to head back into one of the worst inflation rates in the last 50 years. It's just completely out of control. And most people just don't want to recognize that for what it is. And like I said, interest rates aren't going to go up at the level that the Fed initially anticipated. It's just not going to happen that way. There's no way. I think we're going to see like initially well over 1% to 2% this year, if not higher. I don't think we're going to go back into the 80s, but you just don't know. You just never know. Kyle, what do you think about USOI? I'll look it up real quick. I know a lot of you guys have been flooding into oil, but I have a big fear. And me and Matt talked about this because the problem is everybody's catching on to this too late. Like, I'm buying into companies right now that are up quite a bit, but I'm buying into them because I already own them at really good prices. So I don't mind cost averaging up. But if you're buying into oil stocks right now, the one thing you have to be really cognizant of is this is just like buying into growth stocks after the March 2020 crash. If you got into those too late and you think you're just going to ride those out as a long-term investor, the chances of you getting slaughtered are probably a lot higher than if you're looking for short-term swing trade. Because I think, like, let's just take a look right now, because I mean, we talked about this last week, and where is something like Exxon at? Exxon Mobil is at like the top of the list, I know, for a lot of oil investors out there. So let's just take a quick peek, because this thing, it's trading down about 1% off on the day. Yeah, so it's kind of flatlined in the last month. I still think we have quite a bit of runway. Has oil actually hit over $100 a barrel? I wouldn't be surprised with these geopolitical tensions here. But let's just take a look at oil chart and just see where oil's trading at, because oil's the big, yeah, so it's holding around $92 a barrel right now. It's actually been pulling back slightly a little bit here, but I don't know, guys. Geopolitical tensions. Putin just met with Germany and I think the France government, and like those did not go too well. Too late to buy oil stocks, in my opinion. Run has happened. I don't think it's over yet. I personally think, because here's the thing, right? This is the same thing with gold stocks right now. Like, I just watched Barrick Gold post earnings, and they're doing $1 billion in share buybacks. They're raising the dividend, and they're very volatile. But the thing is like, this is what happens, right? You kind of get this self-fulfilled prophecy where now this is what everyone's talking talking about, and money goes where attention goes. And just like small caps, guys, we watched those things run up for several months before we started getting that continued sell off. I mean, things ran up pretty aggressively for a little while before they started bleeding down. So, like I said, if you're into swing trading, day trading, I would be more inclined to be playing the commodity stocks right now, because the gold companies, I don't think, have captured the runway that we're about to see. Because again, when you add in all of this stuff, guys, I'm not really the biggest fan, particularly of gold assets or commodities, because what happens is we're going to go into these massive upswing cycles, followed by years of not having much happen. But if you're into that kind of control, I mean, God, guys, it's hard to be bearish on oil or gold stocks. We're going to have quarter over quarters of record margin numbers, which we've already had at the current prices. And I mean, let's just see what gold's doing right now. For a matter of fact, I haven't even looked at it. I've been too busy looking at futures. Let's just take a look at the gold bullion vault, or not the, I think it's gold vault. Let's just take a quick look here. Gold bullion vault. Come on, give me the chart, baby. What is gold doing in the midst of all this? I mean, it's so weird because nobody would even like bat an eye at gold for yeah. I mean, it's over $1,900 an ounce. It looks like it's holding pretty well. But we need to see what it does when markets open tomorrow. I'm surprised it's actually not jumping higher, considering how crazy this Putin news is. Too late. Yeah, but what are you guys doing, man? Like I said, most people in our chat groups are stacking cash right now. And that's what I've been doing for the last month and a half, as mentioned. I don't think I purchased a new stock position. Maybe actually I added money to my TFSA. No, I actually did that by selling Facebook. Never mind. I don't think I've added new capital to my portfolio in over a month now. I've been primarily just shifting and waiting. So I'm just trying to be very cautious here and cognizant of what's going on, because like I said, guys, you're either playing one of two spectrums here. If you're a long-term investor, these are great opportunities to continue cost averaging. I'd be picking up these dips every way along the way. But ideally, and I watch a guy in Canada do this very successfully, he doesn't play these short-term trends. What he does is he has an emergency fund dedicated to the stock market, where if we head into a bear market, a considered bear market territory, that he just ups the amount of capital that he's investing into the markets month over month. So he might add an extra 10 or 20% to what he normally adds month over month, which I think is probably more prevalent for most of the people watching this. But again, guys, I don't know if you're watching this just because you want to see my insanity, because like I said, I play the game of, I'm not primarily an index investor, and I want to outperform the markets to the upside and downside. I've successfully done that for the last 7 years, though people batter me about it. But unfortunately, the numbers don't lie, and I want to keep going in that route. And as I mentioned, you can watch me unfold here, because either it's going to work out or it's not. So I'm really thinking that, my tech weightings are going to get hit hard here. I don't know how Tesla's done so well. Nvidia's still holding up nicely. I just don't think they're going to continue to. I just don't know who's hiding out in those companies, but you can't hide out in overvalued tech companies in a market like this. I just don't think it works out in the macro. So we'll see how it unfolds over the coming quarters, but everyone is panicking, rushing to useless assets like gold, stacking cash like there's no tomorrow. Those are usually massive buy signals. Or am I missing something? You're not missing something, because this is something that Jeremy talks about a lot in financial education, because he sees big value in kind of the Russell stocks, because the small caps have already been hit the hardest. And I don't think they have much farther to drop. But then again, like I said, stocks can always go lower. And that's where the best value is right now. But the thing that you have to understand, like if you're trading the market, when it comes to cash is more valuable in a downtrending market than holding equities. Now, the only reason that is because, yeah, we're in an inflated market. Yeah, cash is losing value. Yeah, people are looking for places to get rid of that cash. But if the markets do go into bear territory, where we see another 5, 10, or 15% drop in the S&P 500, your money that you're sitting on is going to go substantially farther than if you're investing it right now. That is speculating. That is gambling. Don't get me wrong. There are some incredible dip buying opportunities. I see it with Facebook. I see it with BABA. A lot of companies out there. It's just a matter of what is your risk tolerance and how do you stomach the volatility, because a lot of people bought small caps being told that these things can drop aggressively. They didn't care, but once they dropped, all of a sudden their tune changed pretty drastically, right? So I think the thing that most people need to become aware of in this market, really define your risk tolerance. Ask yourself right now, if these markets dropped another 10%, 15%, if you're holding individual equities like Apple and Microsoft, if they go through a period like Facebook and Shopify and all these other companies just did, are you going to be able to stomach a 20, 30% downfall in those companies? And are you going to be comfortable holding them sitting in these downfall stocks for the foreseeable, what could be the next year, the next 3 years? like I said, long term, very bullish here, but I don't think people have the stomach capability, especially in these higher volatile companies like Tesla and Nvidia, to ride out the short term factors, which is why I think it's important to understand your weightings. And yeah, a lot of people are using gold to hedge. I don't think a lot of people are going all in gold. I don't think people are going all into cash. I think a lot of people are probably just doing what I'm doing, which is just stabilize the portfolio, make sure that if you're overexposed to certain things, to make sure that they, because like I said, I brought my Apple weighting down to like 4.8%. If Apple dropped even 50%, that's 2% of my entire portfolio, right? I'm comfortable with that. I had Tesla and Facebook at like 7 to 8% weightings. If those things dropped by 30 to 50%, it would hurt me a lot. Like I would feel that pretty aggressively in my portfolio. So then I kind of had that realization that, hey, I love these companies for the long term, but I don't want to stomach that short term pain. So the idea, sell them off, reweight where you think capital is going to have the best protected downside. That is really for me only two things: foreign stocks and primarily cash. And my plan with my cash is I'm trying to get to about 10% of my entire portfolio in cash. So for my portfolio, that'd be probably somewhere between $30,000 and $50,000. I'm going to ride this out probably for the next few months just to see what inflation does, just to see what the Feds do. And once we kind of get a more clear picture of how these geopolitical things work out, and like I said, I don't even care if the markets go up. Because, like I said, unlike most people in this market, guys, I'm fully invested. If the markets turn around from here, I'm fine. I mean, I'm still making a shit ton of money, but I don't think that's what's going to happen. So I don't mind if the markets go up, but if they go down, at least I have a hedge, which I think most people lack, because a lot of people get all into these markets and they kind of get attuned to the idea of just hammering every dollar they make into the market. And the problem is if you're an experienced investor and you already have a large weighted portfolio, you don't have a lot of capital to increase these downsides or these downsized risks, because essentially, let's say you have a $500,000 portfolio, but you're only making 50 or 100K a year, and you're only contributing 15 or 20% of your portfolio. Well, what is that on a $500,000 portfolio? That's about 20 grand. That isn't going to make an impactful difference. So even if the markets drop and you unload 20,000 over the year, you're 15 or 20% from your 100K salary, you're not even going to notice that. You're just buying into a downtrending market, right? So the idea is to make an impactful difference, and you need to have a sizable position to do so. So like people like me, Kevin, are hiding out in gold because gold is going to offer stability through this. So when the markets finally settle out here and we know what's going on and we kind of get rid of these uncertainty fears, that's when you can start unloading that cash, because the likelihood of you making a greater return is going to be obviously a lot higher. So like I said, I wouldn't get caught up in the fear-driven market of people just saying, oh, stack cash, stack gold, that's all you need to do. I think it's important to continue to look for opportunities. And, if you're newer to the market, let's say, and I've talked about this before, let's say you only have a $10,000 portfolio, you should be 100% investing in this market. I think for somebody that's brand new to this market, that's just investing, by all means, because if you have a 10K portfolio, you could easily add 10, 20,000 to your portfolio over the year, which means you're going to double up your portfolio size just by investing. But that's not going to happen to somebody that's already well experienced or is at retirement age. So those are the people you need to be worried about. I don't think somebody in retirement age really wants to see their tech stocks or their index fund that they're relying on to see some growth out of year over year drop 10, 15, or 20% with no idea when that rebounds. And I've noticed a lot of people, like I've been listening to people like Dave Ramsey, which I think is funny because he used to be all about these high growth mutual funds. And I've noticed that on some of his recent showings where he's talking to people about that are fearful of this market, he really more or less talks about companies like Home Depot, like these medical stocks. And I've noticed that he says, well, even if the markets tank, yeah, maybe 2 out of 10 companies might just disintegrate and not come back and rebound, but it's unlikely that Home Depot, Procter and Gamble, all those companies are just going to wipe out and be gone forever, right? So I've noticed that a lot of these growth investors, these people that were highly in tune to and don't get me wrong, I mean, I got overzealous by the idea of these growth stocks at the rate they were growing, but I've noticed that every single growth investor, even Dave Ramsey, his tune is completely shifted into value plays or consumer discretion or staples, right? And even the consumer discretionaries are doing great. I mean, Philip Morris, I've noticed a lot of people hiding out in those stocks right now. All in Ukraine indexes. Uranium is cyclical. All the commodities are cyclical, man. We're in a commodities renaissance. This is going to be the greatest commodities boom probably potentially for the next 10, 20 or 30 years. We don't really know how long they last, but typically, like I said, you're going to see this boom happen. And as soon as it's done, whether that comes in the next year or two, that's when you're going to want to exit. because your money's just going to get tied up and it's just going to become boring like it has been for gold. Uranium is going to take off. I think uranium already has taken off. Uranium is one of these things that I'm highly bullish on, along with copper. Basically, any battery metal right now. I mean, copper's so big and renewables and just everything. And it's trading up a lot, right? So, I mean, I work with a lot of guys in the commodities market that way. And let's just take a look at the uranium price, though, real quick. It's hard to be bearish on them right now. Yeah, uranium has been flatlining, holding around $44 a pound, and it's still holding like an insanely awesome level for profitability. So I mean, what I pay attention to is watch the upcoming quarters for any uranium, gold, commodities companies, because like a lot of you are saying that the hype has already come. It hasn't come yet because the earnings are not even fully baked in. For as long as these prices stay at these high rates, we are going to get quarter over quarter insane margins coming out of these companies. Go look at Barrick. Barrick Gold is the prime example for this. So for as long as you look at commodities trading up at these highs, the stocks themselves, especially the ones that are trading at cyclical lows, are going to be posting gangbuster earnings. And that's where money's going to go and hide for now, I think. Nuclear, wind, and solar, 100% agree. I think the four primary markets of, let's say, the energy market, I think, like you're saying, is nuclear, wind, and solar. But one aspect people are underlooking is the utility sector. Utilities are going to go through a massive upgrade right now. And this is something Tesla's currently testing out in Australia. They're testing it out in Houston. And I think people are underlooking that aspect of the market as well. I think utilities are going to follow suit with this massive energy boom because, unfortunately, the utility grid is too prehistoric. And I feel like that's part of the energy market that's largely overlooked right now. I think the inflation was so low in 2020, 2021 that these increases are just making up for the last 2 years. So inflation, there's so many things impacting inflation that it's kind of horrifying, to be honest. And I don't, like I said, it's just between logistics, between fuel, the geopolitical tensions, between just printing 80% of the money supply in a year and a half, all of that is starting to bake in, and it's exponentially raising the inflation rates to the point where we're back right now. I think we're in the 1980s. Until somebody can prove to me otherwise, I would be horrified if the Fed doesn't drastically increase rates well above what we were expecting. I don't think they want to crash the market, but I don't think they have a choice. Um, I think it's just bad news on bad news, and it's kind of like a black swan event right now because if we didn't have the geopolitical tensions, it would just be inflation rate focused. But because we have that, it's kind of precursoring the market to more pain. Canadian telcos are safe to hide in. Yeah, I mean, I've been hiding out in TELUS. I loaded up on TELUS. Everyone was telling me I was nuts. Same thing with the bank stocks. People were like, why are you buying banks at all time high? Why are you buying TELUS at all time highs? I'm up on my TELUS position. I'm up on my bank position since I've been buying them at the beginning of this year. I think the banks are getting overvalued here. But again, if we're going to see interest rates go up multiple percentage points higher than they were anticipating, the banks are going to start printing. The big fear with banks, I'm more actually bullish on telecoms because the problem with banks is if the markets collapse and it becomes harder to borrow money and we start seeing it impact the real estate market, you're going to see the banks start getting impacted because they're highly leveraged in real estate. What are your thoughts on? Yeah, that's there you go. That's my thoughts. I'm I'm the real estate market is the hardest one to wrap my finger around. I honestly think the real estate market is the last market to fall. So typically we see small caps sell off, and that's happened. I think small caps are probably where most of the opportunity is, which most people might not agree with. But I noticed that's Jeremy, your financial education. Everybody is going to be looking at small caps as probably the first place for a recovery because it's where the best value is. But because of the fears right now, people aren't going to be buying them. Now it's moving up to tech. I don't think tech has experienced what small caps, like all these large caps, are going to experience yet. So I'm more bearish on large caps. So once those things fall and interest rates start going up, then we're going to see the real estate market get hit. My big problem with real estate is I can't wrap my head around it. Depending on where you live, it's a very different real estate market. Unfortunately, it's hard to look at like the entire Canadian economy or the entire US economy and say, I know what's going to happen with real estate. Now, obviously, real estate is highly correlated to interest rates. Historically, for every 1% interest goes up, real estate corrects 10%. But that is in a period of time where real estate has generally been relatively accessible. Like in 2008, anybody could buy real estate, guys. Like it was easy to get loans. Anybody could go bid on homes. It was easy to get. It's not easy to get real estate right now because the supply isn't there. Then the demand is astronomical, especially where I live. Homes are selling for 30% over asking. The real estate market is still hotter than ever. And I don't know if you have this combination of interest going up with low supply, how much it's going to material impact the entire real estate market until we get the supply problem figured out. Um, because we still have in Canada, especially, we have immigration coming in at record numbers. We have too much red tape around development. And I've noticed, and I've talked about this a lot, which is why I'm so bullish on Canadian real estate, especially the Canadian REITs, is because I've noticed that the government, and I've seen this actually, go look at Dream Industrial. Dream Industrial really laid this out. Not Dream Industrial stock, but what is it? Dream Industrial, not Dream Industrial. So Dream Industrial, the company, owns four different publicly traded spin-off companies. One of them is leveraged purely in development real estate, and it has exploded. It is up insanely large amounts, and they have partnered with the Canadian government for like over $1 billion in investment in development. Now, I've noticed the same thing happening with RioCan. I've noticed the same thing happening with Smart Centers. All of these large capped REITs, I think the government is leaning into them to fix the development and the kind of the supply problem. Because something like Smart Centers is literally building cities, literal cities around these shopping centers. Like if you go look at their development plans, they're insane. They're going so heavy into this. And same thing with RioCan, right? Like RioCan is trying to build cities and malls in the sky. Like, and that's where all that money's flooding into right now, right? So I'm curious to see how the real estate market unfolds. Every time somebody analyst comes out, I always think they're wrong because there's no way to pinpoint it. And some analysts are like, oh, the real estate market's just going to level off, but we're still going to see some upside. And that's kind of the same thing they said about the stock market this year, that there's going to be volatility, but we're still going to end the year higher. Nobody knows what the hell they're talking about. Every analyst is just talking out their ass. That's why I try not to put that's why I don't put price predictions on shit, because you're just gambling. What was was it the Jack Bogle, or was it the Vanguard guy who said the saying that basically the dumbest thing you can do is set a price target next to a date. He says you can put price targets all you want and you can predict dates all you want, but don't ever pair the two together because you'll never be right. Like you'll always look like an idiot. And like I said, guys, if we see overinflation get out of control, people having a harder time getting loans, I wouldn't be surprised if the real estate market stops going up. I just don't know how it goes down, because those people that bought these multi-million dollar homes, they're not going to be inclined to keep flipping them or leveraging them into other deals. Because what ends up happening, guys, there's a lot of people out there that just bought these insanely overvalued homes at these ridiculous low interest rates. Now that the market sees interest rates going up, they've locked in a really good rate for 5, 10, 15 years, whatever. They are not going to be inclined to sell that house, because now they're going to have all this capital and they can't shift it into another mortgage, because if they do, their expense rates are going to go through the roof. So all these, so it's so hard to wrap your head around the macro events in the real estate market, because it's highly dependent upon all of these factors and how people contribute them to their mortgages. And in Canada, because real estate's excessively out of control, in my opinion, I honestly think the Canadian real estate market is in a bubble. I don't think that should prevent you from buying a house. I think if you can afford real estate, by all means, it's one of the best things you can do in your life. But there's a big defining factor there of if you can afford it, because the dumbest thing people do is they leverage all of their assets into one home. And honestly, it's the stupidest effing thing anybody can do. I talk to so many financial advisors and they talk about this all the time. If you don't own any other assets and all your money's tied up in $1 million mortgage and real estate corrects 30%, you will never sell yourself out of that mortgage. It's impossible. You will be underwater by six figures for as long as the real estate market trends down. You cannot really earn your way out of that problem in a short period of time. That's what scares the shit out of me. Because like we talk about this, if you go back 2 years, 3 years in this real estate market around Toronto, where I live, you could have bought a home for anywhere from 400,000 to $500,000 within about an hour's drive of Toronto. That was reasonable. Like you could have over leveraged yourself. You could have put your 20, 15 or 20% down. You probably would have had a $400,000 mortgage. And let's say real estate decided to correct 15 or 20%. Well, now that $400,000 mortgage is worth what, maybe 300 to 350. Okay, that sucks. But hey, you can work that off. That's not a big deal. But if you're leveraging 20% into the average price of a home right now at $1.2 million, and you put your 20% down, so you're looking at like 250, 300K, you're now like almost $1 million in debt, and real estate has a 15 or 20% correction, you're now six figures in the hole. You now owe over $200,000. And I highly doubt at your current job, you're going to earn your way out of that in a year. There's just no way, right? So it's a horrifyingly scary market for people that don't understand risk. And that's what I think scares the shit out of me the most about the real estate market, is because most people I know buying homes are two people working full-time jobs And if one of them lost their job, the chances of them affording their home is dwindled. But then factor that in, if real estate drops, they're going to be underwater and it's going to be bad. That's why I like cash, because I would love to get into the real estate market. And honestly, we haven't had interest rates significantly go up in the last 20 or 30 years. Literally for your entire lifetime, most of you watching this, you've never experienced a market where interest rates have gone up significantly. And we are about to see that for the first time in my lifetime. This is a market that I have never experienced before. And the only way I can navigate this is with caution and cash, because you want to be able to take it's what Warren Buffett calls an elephant gun. Warren Buffett, a lot of these large cap companies are sitting on an astronomical amount of cash. And this is going to be the market. If things go the way they look like they're going to go, is where your best opportunities are going to arise. Because if real estate starts correcting in the next year by, 15, 20, or 30%, I mean, you're going to be pretty glad you had a down payment, and you're going to be picking these loans off people that are now desperate to get out of their home, which means you're not in a bidding war anymore, because most people are going to be bled out of cash, terrified to take out high interest loans, but you're going to have a great deposit and you're going to be able to afford the interest rate because you were diligent. Does that happen? I don't know. That might not happen. Who the hell knows what happens? I'm just guessing, right? But I think that right now is a likelihood factor. I would put maybe like a 60, 70. I'm like 80% sure the markets are going to continue to sell off. The real estate market, I'm about 50-50. I don't know. It really depends on how rich people are, and really depends on what interest rates do. Renting forever and paying the rent with dividends kind of makes sense now with properties being so expensive. Rent yields have been decreasing for a long time. So in Canada specifically, you will never buy a rental unit and positively cash flow. It hasn't existed for the last 3 years for as long as I've looked at it, unless you're willing to go into secondary markets. Primary markets, you are like, I mean, go look in Toronto. You can rent a condo for $2,000 a month. You know what that condo costs? That condo is going to cost you anywhere from $600,000 to $800,000. How the hell are you going to positively cash flow off a $24,000 a year income? You cap on property taxes, $500 in HOA fees. You're not making any money. You're floating the mortgage to primarily get capital gains out of the market. That's how the Toronto markets worked for as long as I've been looking at it. And that's why I've never bought real estate, right? And the cool thing about renting, and what I like most about renting, is that in Canada, in Toronto specifically, the rents are locked. This isn't a market where people can just raise rents. I know it's funny to think about that. Oh, if I buy a house, well, I can make rents whatever the market demand for that rent is. No, you can't. You can historically make it as high as the market will let you. And then the government locks you in where you're only allowed to raise rents on your tenants by 1% a year. So I can go rent an apartment tomorrow and justifyingly know how much my rent is going to go up year over year. And like I said, guys, if you're dumping $800,000 into a mortgage, or even a million, let's say, if you're buying $1 million property, you really only need a 5% dividend yield, or like a 4% dividend yield. That's 40 grand a year. That would cover all of your expenses, including your rent, for the foreseeable future. And then you don't have to deal with the housing repairs, the bullshit tenants, the toilet breaking, the roof needing fixing, a 30 grand deposit in roofs, like all this shit that comes into play. I mean, most people keep forgetting that you should contribute about 5% of the housing property into the idea that that's money you're going to lose. 5% of whatever you're buying. So $1 million home, you immediately take 50 grand, because sooner or later it's going to evaporate into home repairs. So, I mean, most people don't contribute those factors either. They kind of just look at the nice gravy train that we've been on. Gov wants interest rates as low as possible. They don't care about people suffering with inflation. They don't, but they do now. I think you're under anticipating that, my man. I think people liked making money, but we're heading into a market that, if it doesn't get under control, we're going into a depression. I know that sounds really bold, but it's an inevitability, and it's happened every single time inflation rates have got this excessive. Go back to World War II. That's how, I mean, it's a drastic statement, and a lot of people kind of throw that statement. That's how Hitler started. I mean, we head into a depression, and then you get a lot of bad problems. And it's all driven by inflation and excessive spending. We are living in a market that even Charlie Munger stated is a disgusting market with a lot of greed and a lot of, money floating around. This is the easiest time in the market to make money, but that gets scary, guys, when we're in a highly greedy market. There's just too much money. Like I said, guys, it's insane to think the US government printed 80% of the money supply in literally a year and a half. That's insane. And that is only one contributing factor to the entire inflation rate. Like I said, guys, food is going up 1% a month. If that continues that way, you aren't going to be able to afford your shit. You are going to have to make a 6-figure salary, because 40 grand a year isn't going to float you anymore. We are moving into a brand new market and the trajectory is not looking good right now. So I don't care if you think the government wants to keep rates low, they don't have a choice anymore. Their hands are tied. They don't care about the stock market as much as they care about making sure the global economy doesn't collapse. And the only way they can do that is by taking out the money supply. So they're going to turn the vacuum on, no more helicopter money. And this is what I keep talking about. And this is why I kind of get like up in arms about everybody taking these government benefit checks. So look, I was one of those people. I lost my job. I took stimulus money. Okay. I saw that stimulus money as something I didn't need, but because for the first time in my life, because I'm self employed, I don't get unemployment checks. I can't sign up to unemployment when I lost my business. I was able to actually take the government stimulus, right? Now, the problem with that is I didn't need it per se. Like, I'm in a good living situation. I had saved money. I'm living with my parents, helping them out, all this stuff, not a big deal. Most people, however, needed that money, took that money. But the thing that most people aren't considering is everybody took that money. Everybody. It doesn't matter whether you need it or you didn't need it. You were taking it because those opportunities never exist. I know people that took on $50,000 in government loans because the government is looking at waiving 50% of those loans. These are people that didn't need that money. These are my friends' parents, people I know that operate businesses. And you know what they did? They parked that capital in cash in their bank. And they said exactly what I'm saying. Why would I spend it? I'm just going to wait because they might not even ask for it back. And if they ask for it back, they can have it back. This is a big problem because we're bailing out people. Like, it's so dumb to me. We're bailing out people that deserve to be bankrupt and we're supporting people that don't need the money. So this is the stupidest thing the Canadian government's ever done, the US government's ever done, in my opinion, especially Canada, because Canada just been handing out thousands of dollars like it's been nothing. And that is insane. It's insane, guys, to be floating businesses that didn't have the balance sheet. Look at the airlines, for Christ's sakes. Like, you know how insane it is that, if you're watching this channel, you know what financial literacy is. You understand 6 to 12 months of an emergency fund. You understand that bad times are always around the corner and you have to be prepared. How? Because the airlines didn't think they had to oblige to that fact. How did these companies think that they were above those rules? Because they did. They were like, we are recession-proof companies. This will never happen to us. And then it happens. And you know what they say? Oh shit, we don't want, it's like GM. Like, GM has done this over and over again. They're like, oh God, too many jobs, too many people going to lose their jobs. We got to bail them out. And then just money printing, money printing, money printing. And what it does is it screws everybody. It is a short-term band-aid to inevitably screw over the entire economy. And now we're on the other side of this. Now we're on the side of, oh, the gravy train is over now, guys. Inflation is here. We are running into some big issues now because we were idiots and we just thought we could spend all the money we wanted. And it's just so insane to me, man. Like, you're looking at small businesses that were living month to month, running things they shouldn't have been running. And they've been taking bailout checks for a year and a half. And now their business is going to open back up. And I hope they survive. I hope they do better. Don't get me wrong. I don't want to see families in trouble. But the fact of the matter is sometimes dogs have to be put down. I mean, it's unfortunate. I mean, like Kevin O'Leary says, man, you got to take it behind the shed and put it down. It wasn't a business that was meant to be operated. And those are the people, along with the people that took too much money that didn't need it, screwed the economy. That's where we're at. It sucks, but it's where we're at. So I don't know how people can be bullish in this market. I'm bearish as hell, but I'm cautious. I'm not like meet Kevin bearish. Like I said, I'll always be in the market. 20 years from now, this conversation will be meaningless. But in the macro, I don't want to see my savings disintegrate by 30%. So I'm not going to be leveraged into tech. I'm not going to be leveraged all over the place. It's just too risky. Well, 18 years old from my state, got 20K from US and 20K from Canada because he was Canadian resident before 2 years old. That's what I'm saying, man. Like, the government made it so anybody could get money. Literally anybody. You didn't have to work. Why do you think we have crazy unemployment right now? I had this great conversation with somebody. I'm going to be posting the video tomorrow. I'm working with a guy right now that runs a crypto company where he's not actually exposed to the volatility of the market, and they're trying to onboard institutional investors. And we were kind of just briefly talking about this idea that this is the greatest job markets in history because people are making more money than they've ever made. It's easier to go out and get a job at any given time. The problem is that's really elusive. That statement might not necessarily be true because of how high general unemployment is. Like, if we had full employment, the question you'd have to ask yourself is, would we be in the same job market if we had full employment and people that are trying to hire weren't so aggressive to hire people? because I think right now, because wages are going up so aggressively, is because there's so much demand in the jobs market, because so many people are unemployed and they're really particular about the job they want. And they're able to be particular because the government handed out over $40,000 in stimulus, and people have been able to sit on their hands for over a year. My girl, and again, guys, the millennials are the ones that are honestly the most screwed here. I honestly, like, my parents are going to be okay. I'm going to be really cautious with their capital. They're heading into retirement. They own real estate. They've done very well for themselves. So even if the market corrects 30%, it's not the end of the world for them. Who it's the end of the world for is people like in my generation. I'm good. I'm all right. But I've watched people leave Canada. I've been sharing TikToks with my girlfriend, because you have to think about the person that basically worked at a restaurant, that has student loans, was trying to educate themselves, probably 50 or $100,000 in debt. They lost their job. The government said, here's some stimulus money. Just take it easy for a bit. They took it easy for a bit, started paying back loans, just taking it easy. The restaurant job came back. Again, particularly talking about Canada, because the US is a little different. And then all of a sudden, come fall time, heading into the Christmas season, boom, government locks everything down, restaurants back to half capacity, everyone's back at home taking government stimulus again. Holy shit. Now these people are at home taking the same stimulus money, but guess what? Inflation is now here. Everything's costing more. All of a sudden, food's up 100%. All of a sudden, gas is up an astronomical amount. Now they're making the same money off the government stimulus. The problem is they're having a harder time affording their debts. They're having a harder time affording their bills. And now their job is starting to come back again. But the problem is their wage isn't changing, but their living standard is costing exponentially more. And guess what they're doing? They're leaving. I've watched so many TikToks of people breaking down because they cannot handle this economy. They can't handle the lockdowns. They can't handle the insane inflation. They can't handle the debt. They screwed millennials. What happened in the last year, if you were not diligent and careful with your money, you're screwed. You're like so far behind. You're never going to be able to afford a house. Even if you're making like 80,000, 100,000 a year, and then taxes get taken off that, unless you're living with your parents, like most millennials are, you're not getting ahead in this market. I mean, it's funny to think too, right? Because most people that own homes right now are boomers. And I talk about this a little bit with like people like Grant Cardone, because Grant Cardone thinks the next big real estate bust is going to come from the boomers generation passing the wealth down to us, because we have been raised to unfortunately not want housing, because housing is just too expensive. And most boomers own more than one home. So when over 50% of the housing is owned by the oldest generation, and that liquidates onto us, and we're the kind of people that don't want to deal with that bullshit, we just want a passive lifestyle, I'd rather rent, we're going to be liquidating at least one of those properties, which is going to lead to a massive crunch of people just dropping homes on the market, right? And that's going to take like 20 years to unfold. That's not going to happen overnight, but it's an interesting thing to take into consideration. I feel like the millennials are by far the most screwed. We are the most diligent because we don't have a choice, but we're also the most screwed because of what's going on here. Like, man, it's just crazy. Think about it. If you could go back 2 years ago, you could, like, things were already expensive, but how the hell do you get ahead? How do you get ahead in a market where real estate's costing over $1 million, man? You can't save your way to afford a house. You just can't. Get high income skills and live with parents while that's all you can do, right? But people shun on that shit. You know how many people in my chat group come in here and shun me for living with my parents? It's honestly hilarious. I plan on moving out soon. Like, I'm going to be heading down to the city. I can afford to live on my own. I graciously appreciate what my parents have done for me. I bow down to them. They've changed my life forever. I will do anything always to help my parents for the luxuries they have given me. I feel bad for people that haven't been fortunate to have that luxury, but unfortunately, if you don't have that as a younger person, I don't know how you get ahead if you live in these primary markets. Like I said, I have to move. When I look at real estate, guys, even my girlfriend's parents are like, you need to go to Edmonton. Like, you need to get out of here. Unfortunately, like some people, I love my hometown. I love my city of Toronto. I grew up here. I worked here. I've been up and down the city. It's my home. I want to live here. I don't mind paying $2,000 a month for rent. It doesn't really bother me that much. But if I want to live comfortably, I can't live here if I want to own a house. It's dumb. Until I made millions of dollars, there's just no way of doing it. Kyle doesn't want to move to Texas with me. I mean, if you're going to marry me, man, and you're going to get me citizenship, I mean, I should get dual citizenship. That should be interesting, actually. But yeah, you have to be willing to just kind of, like, that's the thing, right? Like, you have to be malleable. And I hope millennials are malleable, but I feel bad for the ones that are breaking down, the ones that I'm watching fall apart in this market, because, like, you have to be malleable enough to get up and leave. Like, you literally need to go somewhere where your living standard will triple. And I think in Edmonton, like, you can get almost a 3,000 square foot home for under $500,000 Canadian dollars. And I mean, that's where you're gonna have to go. You're gonna have to go into a secondary market. That's not where I want to live. I want to live near an airport. I want to live in the city. I'm willing to pay for it. I work hard. I'll rent it out for now. I've been diligent. What about living 6 months a year in Thailand and live off? That's an option too, right? That's not an option I like, but that's definitely something for those that are more malleable that can live from this work from home lifestyle. I mean, if you got a work from home lifestyle, I mean, yeah, by all means, go to Thailand for 6 months. I know people that went there and they decided to live there because they liked it so much, and the government kicked them out because they ended up living there for like 2 years, and the government found out and forced them to come back. Thailand, there's some beautiful countries, man, where you can live in hotels for like $2 a day. It's kind of nuts. Yeah, it's a good option. I mean, it's definitely a variable option from the work from home lifestyle. I moved to Eastern Europe 6 years ago, and everything is way cheaper now. Money is worth 2 to 3. That's the thing, right? Like if you get caught in this bubble and you end up living in a primary market, like it's overwhelmingly stressful, and I get worked up by it, but emotionally, I'm not connected to it. My stress is alleviated because, like I said, I've been diligent. I don't feel like I'm in that place where I need to worry about this shit as much. But I know people that do, and it's horrifying. I feel so bad for people in those situations. You're not going to make it here. Unfortunately, New York, if you can make it here, you can make it anywhere. But I don't see you making it here. I just don't. If you're starting from zero and you don't have support, you ain't making it here. I'm sorry. It's not going to happen. Even on a six-figure salary, it is not going to happen. I think the statistic came out in Toronto that if you're buying the average home, you need to be making about 240,000 a year as a household income. And most people aren't getting married right now, right? That's another contributing factor. And like me and my girlfriend are going to be living together. We've been getting along, love her a lot. Things are great. And because we can kind of lean on each other, that also makes things a lot easier for us. But most millennials aren't getting married. Most people aren't doing that because it's hard dating in this pandemic. Most people are living a single life, right? So when you're living in a primary market making less than $250,000 a year, you're up shit's creek. I'm sorry. You're not going to be doing well. It's such a shame, man. It really kind of bothers me because, like, unfortunately, I hate these conspiracy theorists that are like, oh, population's out of control. We need population growth. Population growth is what stimulates an economy. That's why I'm so bullish on Canada, because we have immigrants coming in. But millennials right now aren't having kids. We are the first generation to like have the least amount of kids than ever, if not any at all. So, I mean, it's not good for an economy where people can't live comfortably, be less stressed, have a comfortable living standard where they can have kids, support kids. I remember Jeremy from Financial Education when he was on Millennial Money. He was saying that like he looked at the place that he used to rent and he's like, wow. He's like, not only could I afford the rent at $700 a month, but he's like, I had money to save over. I had a kid. I was getting married. And I'm like, yo, no. And he's just like, look at the rent now. The same place is like 1,800 US a month, and the wages really haven't kind of, if you worked at the same job he worked at, you'd still be making roughly the same money. It's kind of just a shit show. It's an unfortunate shit show. And I think the long-term ramifications aren't going to be good for the economy. And I think the only thing that does good is the fact that we have immigration. But unfortunately, when you see a slowdown in babies, you see a slowdown in the economy inevitably. I hate when people talk about that shit where they're like, oh, you're overpopulated. We're overpopulated. It's like China's densely populated, sure, but these US and Canada need population growth. We're huge countries, lots of room to expand. We need people. People stimulate the economy. People offer more jobs. I mean, how do you think all this shit came about? Because of population growth. How do you think Tesla? How do you think Apple? How do you think all these innovations came about? Because of mass hiring, mass population growth, mass interest. I mean, a lot of people competing, more intelligence. The more competitive the market, the more diligent it becomes. But when there's not enough people to be diligent and the market starts waning, you're not getting the same kind of growth. Reset the wealth button. I think we're going to see that, man. I think we're going to see a brief reset. So like I said, guys, I don't want to ramble on here too much longer, but going back to my factors here, like I said, long term, highly bullish on the market. The macro aspect of things, I am extremely bearish at this point. I'm stacking cash. I don't know if I'm going to do what Meet Kevin does and wait for the Federal Reserve to U-turn, but I'm going to sit here for at least the next quarter or two. I'm not going to be investing new dollars in the market. I'm going to be reinvesting my dividends, and I'm just going to cautiously watch to see what unfolds. And if things get materially much worse, and we start seeing that max fear, then yeah, I'm going to be just investing month over month like a crazy person, and I'll probably leverage debt. I'm still looking at debt. I'm still increasing my debt capabilities. because I think when I feel like it's appropriate, like I did in March of 2020, I'll probably margin a little bit. I won't get wiped out by margin. I'm not one of those people. I think you'll get more rich than you'll ever get understanding how margin and like, I mean, how do you think people get rich in real estate, right? I'm not like I said, I've only ever used margin and interest or debt once in my life. Made a lot of money off of it. Like I made a decent chunk of change, but that's because I saw an insane amount of value in an extremely fearful market with companies that didn't deserve to drop. I mean, RioCan went down to $13 a share. To me, I was screaming like, "Holy shit! This is unheard of. This shouldn't exist." So I leveraged capital. I made a lot of money. Worked out very well. I'm not in a market now where I'd be comfortable leveraging. I mean, Charlie Munger has like 40 million leveraged in Alibaba, but if I start seeing a turnaround in a year and we start seeing these big bottoms again, like by all means, I'll leverage 5% of my portfolio against cash. Keep in mind, I'm one of those people that always has an insane amount of cash to back the leverage because why use my money when I can use the bank's money? So long as I can pay the leverage at any moment's notice. That's the trick. That's the problem most people don't understand is they think they can just leverage themselves and not have any cash flow, rely on their job to pay the debt. I'm one of those people where I need to know that I have enough facets that I could immediately pay the debt off tomorrow if I wanted to. That's how I operate the margin side of it. But again, guys, like you have to have access to liquidity. You want to get rich, you want to outperform the market, you need access to liquidity. You don't want to be 100% leveraged in the market in downturns. You want to just understand how to manage this correctly. Moving to a cheaper country is the easiest. Yeah, 100%. Why don't governments adopt all those children in the world and raise them? See, that's the thing, right? I always feel bad for like how we bring people into these countries because Canada has become very wealthy because we don't take on broke people. We take on people that have really highly educated skills that typically come from higher, wealthier families abroad. People that are looking for better living standards because India's great. You know, a lot of these countries are great, but their living standard sucks. And obviously, their parents see more opportunity in the Western world for them. So they shift them on over here. They bring in a lot of money. I mean, I don't know how much you guys like experience the Canadian economy. I worked at a lot of the because Canada in our education system is primarily driven by international schools, and I've worked at most of them. I used to be an entertainer. I worked at a lot of these international schools. A lot of wealthy kids from Brazil, from all over the world, coming here to get educated, and they primarily want to get jobs here. So their parents work on getting them status, right? So I mean, we end up taking in the best of class people. That's what you want in an economy. I feel bad though, because that leaves, like this guy saying, a lot of these people behind. Because I feel like if you gave people the right opportunity with the right motivation, anybody could come to these countries and get insanely wealthy. They could do very well for themselves because this is where all the money is, right? But the problem is we don't let those people in. So it's like you're kind of, it sucks. I feel bad for those people because I feel like there's not enough opportunity over there like there is here, and they can't get in here unless you have really good skills and really highly educated and come from very wealthy families. I mean, we get diplomats here. I meet diplomats' children's or child's or kids. I mean, you'd be blown away by the people, these children and these teenagers that come into Canada from abroad. They're literally like royalty. They're literally just like money. It's crazy to me. It's crazy to me. But again, you know, is what it is. My family were war refugees, didn't have squat. Yeah, I mean, it's the same thing with my grandparents, right? Like I'm dying to get over to Europe. We had a trip planned to Holland where my grandmother grew up because I've never actually seen where she came from, but she was one of those immigrants. She was one of those people that came from World War II, lost everything she had, came from nothing. I mean, it's a wild story, man. I mean, a lot of us probably came from that, right? Like if you were born in Canada and you didn't immigrate here initially, I feel like you probably were one of those parents from the World War II generation because I'm obviously like European descent. So I want to see where my grandparents came from because like they went through the real hardships. Like, I mean, talking about giving up everything you own your entire life, where you came from. My aunt, crazy story. I'll just finish up with this. She got shot in the hand when my aunt was like, I God knows, like not even, 10 years old yet. She was still like single digits as a kid. They were getting on the trains to get to the boats to leave Holland in the middle of the war. And this lady, from the understand, I don't know how true this stuff is, but these are the stories I've been told. You know, this lady, this random lady, as a plane was flying over, shooting up the trains, grabbed onto my aunt, and my aunt's arms were outside of her. And that lady, I don't know if she died. I think she died, but my aunt got shot through the hand. So she has this scar on her hand from getting on the train, right? And just dealing with that shit. Like, that's wild. I mean, I would love to just kind of get into my heritage a little bit, see what that was all about. Cause I mean, I don't think we have the real struggles. We live in a world where the freaking government's giving you all the money you want. That isn't the world my grandparents came from. I think actually another funny story. My mom told me the first time she ever saw my grandmother cry was in that 1980 interest rate hike. Well, the last time, we saw real interest rates go up because they didn't know they were going to even be able to afford their farm. I mean, the last generation, like I'm going to finish with this quote. It's my favorite quote. Favorite quote, guys. Hard times make strong men. Strong men make good times. Good times make weak men, and weak men make hard times. What part of that cycle do you think we're on? Anyways, on that note, folks, stay cool, stay awesome, and as always, stay diligent. I'll catch you in the next one. Peace.